Welcome to a new technical analysis session. Today is February 5th, and we are going to break down the most likely price movements for BTCUSD. Before we dive into the price action, it is imperative to establish our regulatory framework. Trading foreign exchange and financial products carries a high level of risk that may not be suitable for all investors. The content of this video is for strictly educational and technical analysis purposes. It does not constitute financial advice or investment recommendations. Please remember that the crypto market is highly volatile, and you are solely responsible for your investment decisions. We begin our technical analysis on the daily timeframe to contextualize the price's macro narrative. We observe that Bitcoin has initiated a significant correction after testing higher levels. Currently, the price is hovering around $70,144. Showing consistent selling pressure over the last few sessions. We have identified critical liquidity levels above the current price, specifically the previous daily highs from late January and early February, which are now acting as technical resistance. The immediate point of control to watch is the PDL, or previous day low, located at $71,802. A consolidated break below this zone could accelerate the search for liquidity at lower levels, while the PDH levels marked in green represent the bullish targets in the event of a relief rally or a structural shift. Dropping down to the 12-hour timeframe, the bearish structure becomes even more evident and technical. We can observe how wide-range candles have invalidated previous support zones with notable institutional speed. Bitcoin's current price, trading around $70,204, confirms that supply has absolute control over the market at this moment. It is crucial to note the distance created from the PDL at $71,802. This zone, which previously acted as a floor, has now transformed into an immediate resistance of great significance. Above this level, we have a ladder of targets marked by previous daily highs, such as the February 2nd PDH near $79,300. In this timeframe, we are monitoring for the formation of potential accumulations or reversal patterns, although the prevailing direction continues to suggest a search for deeper support levels before any serious attempt to recover toward the liquidity zones marked in green. As we adjust our view to the 8-hour chart, we begin to identify much more precise institutional footprints. Notice how the price has left behind two fundamental zones of interest, an 8-hour order block and an 8-hour fair value gap, or FVG. These areas represent market inefficiencies. They are gaps where the speed of the decline prevented buy and sell orders from crossing in a balanced manner. Bitcoin, currently trading at $70,491, remains below the PDL, confirming a short-term weakness in structure. However, in the technical narrative, it is very common for the price to seek a pullback toward the 8-hour FVG to balance the market before deciding its next directional move. If the price manages to reclaim the PDL level at $71,802, traders' eyes will immediately focus on the mitigation of that upper order block, which now serves as a high-probability technical ceiling. We move one step further down in our operational granularity to the 4-hour chart. In this timeframe, the market structure reveals vital information: the formation of a new intraday low, which we have labeled as low daily, located exactly at $69,120. This level is now our closest reference support. Notice how Bitcoin is attempting to stabilize around $70,564, after having previously breached the PDL at $71,802. The narrative here is one of consolidation following a bearish impulse. On the upside, we maintain the 8-hour order block and fair value gap as magnetic resistance zones. If the price respects this low daily and begins to build a structure of higher lows, the first target will be to retest the PDL zone. However, as long as we remain below $71,800, any upward movement should be treated with caution, considering it a technical pullback within a short-term trend that remains bearish. We now move into the 1-hour timeframe, a critical window for intraday traders. It is essential to highlight that we are conducting this analysis during the pre-market, just moments before the New York session open. This is the stage where the market sentiment is defined for the highest volume hours of the day. As we can see, price has been trading within a tight range after establishing the low daily at $69,120. Currently, Bitcoin is compressed between this recent support and the technical resistance of the PDL, now sitting near $71,771. The approaching New York session typically acts as a catalyst, we expect an injection of volatility aimed at capturing the liquidity resting both below today's lows and above the previous highs. Our focus remains on the 8-hour fair value gap and order block above as the primary liquidity magnets, should buyers seize control following the Wall Street Open. We continue on the 1-hour time frame to closely observe price behavior in a critical zone. As you can see, Bitcoin is orbiting the $70,000 level. In professional trading, round numbers like this are not just figures, they act as psychological levels where a massive amount of limit orders and institutional liquidity are concentrated. Notice how the price shows indecision and small absorption candles in this environment. The market is testing the strength of demand just above our low daily at $69,120. This interaction near 70K is vital. If the price manages to consolidate above this round level during the New York session, the odds of a short squeeze toward the PDL increase. However, if we exercise caution, we can see that persistent rejection in this area could be a signal that major players are distributing positions before looking for a deeper liquidity sweep. We refine our execution by dropping down to the 15-minute time frame, the ideal window for identifying liquidity engineering ahead of the New York session. At this level, the market structure reveals a high probability formation, the creation of equal highs located around the $69,692 zone. This technical setup is a clear indication of accumulated institutional liquidity. The market has engineered a technical ceiling to entice retail short positions. Currently, Bitcoin is oscillating within a compression range between these equal highs and the low daily support at $69,049. This accumulation suggests an imminent surge in volatility. Our strategy for the remainder of this February 5th session is to monitor the sweep of those highs. A liquidity grab followed by a rejection would confirm continued bearish momentum, while a solid breakout would shift our focus toward recovery targets at the PDL. Staying on the 15-minute time frame, the technical narrative becomes much more robust as we identify a 15-minute order block sitting just above the equal highs we previously mentioned. This order block represents the last bullish candle before the bearish move that broke the local structure, acting as a zone of massive institutional supply. Notice the precision. Price has engineered liquidity in the form of equal highs right below this OB, making it a perfect trap. In high-precision trading, we expect price to make an expansion move to clear those highs, mitigating the 15-minute order block before resuming its downward path. Currently, Bitcoin is trading at $69,431, trapped within this range. Our focus is locked on this confluence zone. The mitigation of the 15 MOB will be the ultimate signal to validate if supply is still aggressively defending the higher levels this February 5th. Notice the surgical precision with which Bitcoin is trading at this moment on the 15-minute time frame. As we anticipated, the price has executed an aggressive liquidity sweep above the equal highs, using them as fuel to reach the 15-minute order block. It is fascinating to see how the blue arrow marks the exact point of impact, the psychological level of $70,000. Upon touching this round number, which coincides with the start of our institutional supply zone, the price reacted immediately with a rejection wick. This price action confirms that institutions are defending this level to maintain the bearish structure for this February 5th. Bitcoin is now trading at $69,860, attempting to consolidate after the liquidity grab. If sellers maintain pressure within this OB, the next logical move would be a break of the low daily to seek new intraday lows, thus completing the manipulation and distribution cycle we have been mapping out. We are now fully immersed in the New York Session Open, the time of highest volatility and liquidity of the day for BTCUSD. By observing the 5-minute chart, we can identify the execution of an advanced technical model, the 5M turtle soup. This pattern occurs when the price makes an aggressive run above a previous short-term high marked here by the blue arrow, with the sole objective of triggering buy stops and capturing the liquidity of impatient buyers. Instead of continuing the breakout, the price is violently rejected and closes back below the level, trapping traders who bought at the peak. This turtle soup is one of the most powerful distribution signals in institutional trading. It tells us that the rally toward $70,584 was simply a manipulation to load short positions before seeking the true expansive move toward our low daily support at $69,049. For those seeking high precision, we now drop down to the 1-minute time frame to structure a potential trading opportunity. Following the 5-minute turtle soup confirmation and observing that Bitcoin remains unable to reclaim the psychological level of $70,000, the odds clearly favor the sellers. In this scenario, a professional trader looks for an entry following the bearish displacement. The technical setup is as follows: we place our sell order with protection, or stop loss, just above the last local swing high, invalidating the thesis if price regains strength. For the profit target, we aim for a risk-to-reward ratio of 1:2, projecting our exit toward lower liquidity levels. As you can see on the position tool, this allows us to risk 1 unit to gain 2, ensuring our long-term profitability remains sustainable. Price is currently piercing the low daily at $69,060, validating that order flow remains bearish for this February 5th session. We continue monitoring our trade on the 1-minute chart to observe the development of the order flow. It is fundamental to understand the logic behind our risk management. We have placed the stop loss just above $69,506, as this represents the last candle that showed a forceful rejection of buying pressure following the initial manipulation. By placing our protection at this technical swing high, we ensure that if the price returns to that zone, our distribution thesis would be invalidated. As you can see in real time, Bitcoin is reacting exactly as projected, moving away from the $70,000 mark and decisively breaking through the low daily level. The wide range candle structure confirms that selling interest is dominant. At this moment, the price is heading with great momentum toward our profit target at $68,142, which would complete our 1:2 risk-to-reward ratio. Patience and adherence to the trading plan are what dictate success in this February 5th session. We keep our focus on the 1-minute chart for a detailed follow-up on the position. As you can see, following the activation of our order around $69,060, Bitcoin has started printing bearish intent candles with solid closes. It is vital to notice how the psychological level of $70,000 has been definitively left behind, now acting as an insurmountable barrier for buyers. The market structure on the 1M timeframe is validating our macro analysis. Every small attempt at a bounce is quickly absorbed by supply, creating a series of lower highs and lower lows. Currently, the price is trading at $68,603, meaning we are already in positive profit territory. There are no signs of exhaustion in the move. On the contrary, the acceleration toward our target at $68,142 suggests that pending liquidity at lower levels is being aggressively sought by institutional algorithms in this February 5th session. We continue monitoring the 1-minute chart to perform a vital adjustment in our risk management. As you can see, the bearish move has gained considerable traction, allowing us to reduce the stop loss to protect a large portion of the exposed capital. By moving our protection to a tighter level, we transform the position into a low-risk trade while the price continues its expansion. It is crucial now to focus on the yellow line we have drawn on the chart, the exact $68,000 level. Just as with the 70K mark, this is a round number of high psychological and technical relevance that will act as our next institutional support. The confluence between the lower high structure and the magnetic attraction of this round level suggests that Bitcoin has a clear path to hit our take profit. Discipline and monitoring is what separates a trader from a gambler in this February 5th session. We maintain our presence on the 1-minute chart to observe one of the most rewarding phases of trading, accelerated expansion. As you can see on the screen, Bitcoin's decline is becoming extremely steep with overwhelming selling momentum. In response to this verticality, our professional approach is to actively trail the stop loss following the structure of the drop. By technically chasing the price, we are not only eliminating the initial risk of the trade but also guaranteeing a profitable close regardless of what happens next. Notice how the price ignores any attempt at a pullback, validating that institutional order flow is fully committed to the downside in this February 5th session. We are just a few points away from our key support at the yellow line of $68,000. At this stage, emotional management is just as important as technical skill. We stay calm and let the market reach our programmed targets without impulsive intervention. We keep our focus locked on the 1-minute chart as we approach the conclusion of this trade. As you can see, Bitcoin is printing capitulation candles, characterized by solid bodies and virtually non-existent upper wicks. This is the definitive signal that liquidity is being completely absorbed. We have continued to trail our stop loss to ensure this February 5th session is a resounding success, regardless of any unexpected last-minute pullbacks. The price is now testing the $68,236 zone, just a short distance from our final take profit and the psychological support of the yellow line at $68,000. It is vital to notice how the order flow has respected every technical level we mapped out from the higher timeframes. In professional trading, this is the moment of maximum discipline. We do not close manually out of fear, we allow the market to trigger our programmed exit order, thus completing our management with an impeccable risk-to-reward ratio. We are entering the final stretch of our trade. Bitcoin continues its vertical descent, validating the strength of the supply after the New York Open. As you can see, price is just points away from hitting our take-profit zone. I have aggressively trailed the stop-loss to lock in maximum gains from this move. The market structure shows no signs of reversal, every 1-minute candle reinforces our bearish thesis. We are about to reach the technical target at $68,142, culminating a high-precision session where patience and institutional analysis were the keys to success this February 5th. Target reached. As you can see on the 1-minute chart, Bitcoin has hit our take-profit level at $68,142 with surgical precision. The selling pressure remains so consistent that the price even briefly pierced the psychological support at $68,000, marked by the yellow line. This trade allowed us to capture a clean, professional move based entirely on institutional liquidity readings and smart money models. By dynamically managing the stop-loss, we closed the session with a risk-to-reward ratio higher than our initial setup, protecting capital and maximizing returns. It is a perfect example of how patience and waiting for price to reach our points of interest, such as the 15 MOB and the 5M turtle soup, pays off. The position is now fully closed, and the profits are secured in the account. As you can see at this February 5th session close, Bitcoin has followed our roadmap to the letter, finally reaching the psychological support at $68,000 marked by our yellow line. This trade demonstrates that by combining higher timeframe analysis with high-precision 1-minute execution, the results are consistent. If this technical analysis and the explanation of smart money models have added value to your trading journey, I invite you to subscribe to the channel and hit the like button. Your support is vital for us to continue creating professional content at this level. Remember, I personally respond to all your comments, so please feel free to leave your questions or suggestions below. Don't forget to share this video so our trading community can keep growing. Thank you for joining me, and I'll see you in the next session.